Welcome to yet another episode of the Crypto Spender podcast. Starting out, you should be checking your price options on exchanges using this website called Tradeblock. So Coinbase is one of the most popular exchanges, but usually it has the worst price to buy Bitcoin. It consistently has some of the highest prices possible out of most exchanges, and Bitstamp is a pretty old exchange, and it also has the lowest. This is very obvious when you look on Tradeblock. Saw this, like a link to this website on Twitter like a few days ago, so that's why I'm talking about it now. So, like I said, Coinbase usually the highest prices, Bitstamp lowest. Kraken sits in the middle, but it has a lot of security issues, so not sure how much I'd recommend Kraken. And then some people have been talking about Gemini or something, but I don't really know about that exchange all that much. I just heard people talk about it. But yeah, Bitstamp's not that bad, and I'm definitely looking more into using them, considering I didn't realize how big the discrepancy was between them and Coinbase. Next up, Bitcoin breaks the CBOE site because, as you know, futures trading started. It was issued on Monday, and the website just could not handle all the volume of interest that futures trading entailed. Not only did their website crash, but Coinbase and Bitfinex saw some issues as the futures trading was launched. Both websites had maintenance, and then like the past few days, and as the price has been kind of everywhere between the whole 15 and 20k area, it's not really welcomed to have some major exchanges go dark like they did, but it happened. And as Bitcoin's struggling toward that 20k, the rest of crypto is currently seeing some surges in price. Next up, SEC official cryptocurrency investment funds are raising questions. The main concerns were raised about if funds that are offering cryptocurrencies as an option, are they adequately explaining the risk factor to investors? So right now everything is doing well and surging, but mass crashes do happen. And at one point after the crash of Mt. Gox and the whole Silk Road fallout too, the markets were very super stagnant. In like 2014, especially in 2015, and even toward the middle of 2016, which is, this whole stagnation was one of the reasons I just stopped looking at Bitcoin, honestly, because it was quite the time period of prices just being the same, just there, nothing happening. Not a lot of even interest in the general crypto market back then. It was sure something would pop up that's new, but there was like no excitement. But this time it's a bit different. I don't think we'd see another massive stagnation that lasts as long as it did. At least not yet, until crypto becomes more widely adopted as a whole. However, I think we can still see mass swings in price and mass crashes, especially with this Tether situation possibly being the catalyst with their margin trading on this next fallout. And speaking about Tether, I saw an interesting thread on Reddit a few days ago on our BTC. The link will be with all the other sources, but the gist of it is one user spent some time tracking wallets of Tether, and Tether Limited, the company of Tether, controls 73% of all Tethers in circulation. This isn't a fact, but it's more like what this person has come up with from their investigation, their unofficial investigation they've done. So this could imply a few things: that the volume was possibly manipulated, and it raises major concerns about what are they doing as people are exchanging that remaining 27% exchanging their bitcoins to tethers. Like, what are they doing there? Because as we all know, they can just print more and kind of dilute the amount, so they can effectively still own majority of tethers at all times. However, this kind of proves that this idea that it's 1-to-1 is probably far from the truth. And some suggestions in the Reddit thread even says that more than likely they're kind of doing a fractional reserve kind of thing with Tether, and it's actually worth not really a fraction, but I think it was around 60 to 70 cents, not really a dollar. This whole situation kind of proves the weird legal gray areas we are right now. I know people aren't looking forward to regulations, and if done badly, it's just worse than no regulation. But situations like this really call for some kind of industry call out for a standard of having third-party audits on these major centralized exchanges, especially since they are really the biggest thing that could destroy the market right now. People like complaining about miners, but miners are just gatekeepers of transaction speeds at most. Usually they don't have the ultimate power to destroy markets as much as exchange could possibly destroy markets. So hopefully eventually we'll have third-party audits as a standard consistently, at least every 6 months or something. Or people will hopefully start using decentralized exchanges once more of those decentralized exchanges start to pop up, because currently there's really not a lot, and there's only 2 that I'd even consider major decentralized exchanges, but their volume is still very low compared to basically any other exchange, like any centralized exchange, which is sad. But I think once a Tether fallout happens, because I'm pretty sure it will happen eventually, I just don't know how badly it will affect the markets as a whole. But once that little fallout happens, I'm sure people will be more encouraged to look out for decentralized exchanges that are peer-to-peer, and you don't have to worry about some entity behind the exchange playing with or manipulating the reality of the market. Excuse me. And next up, France approves blockchain trading of unlisted securities. So France is basically kind of designating crypto as their own thing in a way. To be listed on a financial exchange, you must still be registered as a security. However, it seems like blockchain-based platforms are given the okay to host other, crypto-related things. I think the main reason for this is kind of filters users in a way. Financial exchanges, you could have a multitude of users that may actually not realize the risk of crypto, while if you're seeking out a blockchain specific platform, then you probably understand what you're getting into and less risk overall for I think like less risk for the entire ecosystem when someone's educated on what could possibly happen. And I think that's, like I said last time, education will be a very important thing for crypto to really start pushing more, like kind of casting off this notion of quick profits or unlimited upward gains for a bit of reality and education to other impacts that this technology will have. Next up, Parity is urging rescue to their frozen coins. So Ethereum is rising in price, and no doubt that plays a major part on why they're clamoring for rescue here. Really, it's not going to happen, it seems. Sure, users are convincing Parity team to advocate for this rescue. However, Nick Johnston, an Ethereum developer, has criticized this idea of rescuing them via hard fork extensively, primarily because the solution that they have proposed would wreck Ethereum's smart contracts protocol, and the alternate solutions haven't really been agreed upon. So I wouldn't expect any kind of Parity solution until the next major Ethereum update, because it really doesn't make any sense to even address it any point before trying to include it in the next hard fork that's planned, rather than doing something exclusively for it. And I'm glad they're so far sticking to their guns of not bailing out Parity despite millions being hung up, because this means as more things like this happen, they would have to continuously bail out people. Not everything is like the big DAO community consensus bailout. And I think it's important for companies to realize that all this technology is very immature still, and things like this will continue to happen for a while until it gets more stable. Next up, Bitcoin becomes the second most popular Wikipedia page. So this is kind of showing that online presence / search for Bitcoin is growing and has grown immensely. And we're almost to the point where many people in developed countries have heard about Bitcoin. However, we're pretty far off from the average person holding cryptocurrency. This fact of a lack of mass adoption and utility was pointed out by Buterin on Twitter a few days ago. He kind of went on talking about how utility cases in crypto hasn't gone up as prices have gone up. Kind of showed that, hey, yeah, there's more utilities than we started, but is the market really worth 500 billion? Like, is there I guess you could say either labor or use backing that 500 billion? And it seems like he thought not really. I agree in part because it was added super quick, and I don't think in the span of 6 months that we've got that much utility out of any coin to justify the nearly 400 billion we've added this quickly. really added on to like the Tether situation and other security and related incidents that we find, like the possible passport stuff and all that. I'm just super skeptical about exchanges, and no, there's really no telling how hard this next bear is gonna be when we finally hit that downturn on the whole market. So I'm pretty cautious for the coming time. Exchanges are just too sketch right now, even more than they were used to be. A lot of money is flowing in, and a lot of funny stuff is happening at the same time too. But hopefully in the future we'll see more use cases, more utility in the crypto world as the market matures and all the funny business gets slimmed. SEC is halting a multi-million-dollar Munchee ICO for a security violation. So the SEC is really ramping up the law enforcement here. This Munchee ICO was in California, and they were forced to return funds because they were issued a cease and desist straight from the SEC because they are classified as an unregistered security, as many ICOs are classified as unregistered securities, no matter what kind of words they call themselves. And I'd expect more of these to occur as regulation catches up to the market. I said this before, but I'm say it again. The SEC has considered basically every single ICO a security, and no matter what you call it, it's a security, and not registering puts you at risk of being shut down or fined or whatever the SEC decides to do to you. So anyone considering to host an ICO not being compliant and registering as a security puts you at massive risk in the future, especially if you're in America. But don't think being out of America keeps you safe, because I mentioned the Plex coin a week ago or 2 weeks ago, don't remember, but they were Canadian and they got shut down by the SEC. In the future, I'm looking to have an episode that kind of explores this, so look out for that in a month or so. But on to the next topic. Bitcoin energy demands. This is a hot topic. So growing Bitcoin mining energy demand is causing blackouts. A lot of people are showing concerns about the effects of Bitcoin mining. It's a topic I've talked about this month too. Well, I think last month actually, but as Bitcoin's price and popularity rises, the difficulty on the proof of work will keep increasing. Right now it's already using, I think it was 15, either I don't remember the decimal. It was either 15 or 1.5% of the total world's energy consumption. 1.5 makes a lot more sense, so I think it was that. But even that is a lot, considering this total energy consumption of the entire world. We've already seen that Bitcoin is using more energy than certain smaller countries. I do remember covering that it's using more energy than Nigeria or Ireland. So that's something. I think eventually we'll have to switch off from proof of work. I don't know if Bitcoin can do it, but proof of work for any new coins will not work. It will be an obsolete concept, I think, except for things that are claiming to be super fraud proof, because that's the real main selling point of proof of work. How it's pretty hard to fraud, since the massive amount of energy and just infrastructure needs to do transactions. Proof of stake has been offered as an alternative. However, I don't really agree with proof of stake in its basic form, because that just means people who got in early with a smaller price point and a larger stockpile have a massive advantage. Currently, the only solution that's available right now is the use of delegates, which is kind of similar to proof of stake in a way, but instead of having this largest stake and you being like the thing, you give your stake power to a delegate that you effectively vote for, and they kind of help maintain the network. Sometimes it's not even counting your stake power, sometimes it's just your vote as a user. But I feel like that's a better way to go about it, for now at least, considering if a delegate is acting up, doing something malicious, you could very easily pull the plug of support for them as users and vote someone else who is way more reliable and such. This system also incentivizes people to be delegates, because they're the ones getting rewarded for basically passing the transactions through their servers they typically set up. So I think for now that's the best solution available, but ultimately we'll just have to keep pushing through and finding better concepts to solve this energy problem that will eventually hit. But it's not an issue right now, and some people are blowing it out of proportion how intensive the energy demand is right now. I'm not really concerned about that. I'm looking more toward 5 to 10 years from now, when it's actually just improbable. I mean, it's just impossible to even think about how crazy, how much energy would go into mining a single block in 10 years. That's really what I'm more concerned about. Right now, it's manageable, it's fine, but we do need to be looking towards better solutions, because mining is definitely a concept that cannot be used forever. This proof of work will be obsolete eventually, unless we somehow create some Dyson spheres. Then I guess proof of work is living. But on to the next thing. To kind of bounce off of that, Andre Antonopoulos received a $50 Bitcoin donation that had a $13 fee, almost $14. I think this actually helps highlight the absurdity of proof of work, because until second layer solutions appear, you can expect to see lots and lots of similar situations like this pop up. One thing to note is people who point this out, the transaction fees, typically are Bitcoin Cash supporters, and I personally find that hilarious, considering Bitcoin Cash also has, it may have like smaller transaction fees, but it's smaller transaction fees, but transaction fees for Bitcoin, oh god, I messed that totally up. Transaction speed is what's still laughable. Their fees are lower, but the speed is still garbage compared to a lot of other coins you could be using. Why would I use Bitcoin Cash or Bitcoin when they're both relatively slow in comparison to Litecoin, BitShares or a lot of the more, even Monero, all these lower price coins that aren't, that Litecoin's depending on proof of work, but BitShares, for a very specific example, I'm pretty sure it's faster than any of the ones I mentioned, and it doesn't use proof of work. So that's really supports my beef of proof of work right now. And even if Ethereum uses proof of work, they're thinking about switching off. I think that was one of the plans for either the next update or the one after that. They switch to the proof of stake with Ethereum flavor in it, of their own little ideas modified. But yeah, this little Bitcoin tribal division thing is kind of hilarious because they're both bad in certain ways, and I don't see the reason to prefer Bitcoin Cash over Bitcoin if you aren't some super Bitcoin maximalist. Then the best course of action, I think, which is, sure, you can hold Bitcoin Cash, but I treat it the same as Bitcoin. And if I was trying to actually use it for something, I'd use Litecoin. Like if I was trying to use crypto for something, I'd use Litecoin or something not either. Next up, the CFTC chair saying cryptocurrencies are unlike any commodity the agency has ever seen. This is a pretty small article that just saying how they don't know what to expect from crypto, and they're working with the SEC to try to fit it in the legal framework of what they have today. So it'll probably be a while until they really understand how to define what the legal framework of crypto and what rules fit into other financial, well, in this case, other commodity markets. So I'm sure we'll be hearing a lot of news from them in the future about what they're deciding, like the legislation they're trying to decide upon. Bitcoin might be on eBay soon. So Bitcoin be on eBay, there's only one big concern here, is the fact that sellers might not even want to accept Bitcoin because high transaction fees and volatility are the big reasons. And not only transaction fees from Bitcoin, but fees on eBay itself. That's just a lot of things that will kill the margin of eBay seller, and the volatility makes it an even bigger gamble. So even if eBay does adopt crypto, or especially Bitcoin on their platform, I don't see tons of people using it for a very long time. Like, they might attempt to use it, but there's no reason for a seller to use it unless they want to hold Bitcoin in the long term. Next up is tax reform. 2 tax cases. First of all, tax in America. So this tax bill that everyone's been talking about might affect crypto in a slightly negative way. The main thing is they aren't clear. It's not clear about how trading crypto to crypto is taxed, or if it is taxed. That's still up in the air. But one thing that is really defined in this tax bill is that crypto will most likely be charged using FIFO, which is first in, first out. So if you don't know accounting that much, that means that coin that you bought for $1,000, yeah, that gets charged first. Even if you just bought one for $17,000, because that that wasn't first. You're gonna get charged for the capital gains of that first coins you bought. However, it seems that there is a little caveat to this, that it only applies to account basis. So I don't know how large the definition of account will be. Will it be website centric or wallet centric? But this vague definition kind of means that if you take your coins off your exchange wallet that you bought it on and put it to your own wallet and sell it on a different exchange, that might incur totally different capital gains tax. I don't know, it's pretty vague right now on why they're saying it's only on an account to account basis and not throughout the whole thing. This could also mean that if you aren't taxed on trading crypto between crypto, that you could trade Bitcoin to other cryptocurrency, and potentially kind of maybe do some weird reporting that the price you bought it on is the price you bought the other cryptocurrency for. So if Bitcoin went down and the other one appreciated, so you'd have more. I don't know. This law just seems out of place and stupid. Seems like you could do a lot to possibly not completely circumvent it, but really put into question how much you should actually be charged on taxable gains. And finally, South Korea is thinking about doing something similar, but its timeline is unknown. Their regulations have been pretty harsh, actually. Well, not harsh, but heavier than the U.S., which is surprising. Even outright banning it in some situations. I know they banned ICOs already, so if South Korea decides to tax crypto, I can almost expect that there will be a higher tax than other countries. But I could be wrong there. I don't really know South Korea taxation like that. Just how they've been behaving toward crypto kind of implies a more harsher stance, but not totally outrageous stance. And that'll be it for mainline news. Kind of slower today because I was talking at a normal speed, and because I'm not rushed to get it done, mainly because finals are over, and because of that, I have a lot more time, and I'm looking for a total overhaul, making some big changes in the next 3 weeks-ish before I hit up a new semester. And in these 3 weeks, you can expect website changes. Speed will probably not improve all that much, but visually it will change. I'll work on speed once I get a lot of traffic or more traffic to the website. Most people don't actually go to it. Email, the current way I was doing email is redundant, and I've been thinking this for a while. That's why I really haven't been even sending them. I'm thinking about overhauling that to being more of kind of a opinion piece, or speculative thing, like throwing out my opinions on whatever hot topics are of that month, week, or in that 2-week period. I don't know how often I'll do the emails. I'm kind of leaning toward more than less, so weekly is the most possible, but it won't be like Mondays. It'll probably be like Fridays, since I'm usually free on the entire day of Friday. And I'm also expanding to Spotify, so if you like using Spotify and you actually listened this long, catch me on Spotify instead of whatever you're using now, because I'll be on there. And yeah, that's the big changes. There might be more. I don't know. We'll see. Like I said, I have time, so there's probably gonna be a decent amount of changes in these next 3 weeks. Hopefully, for the better, I guess. I won't always talk this slow, because today I feel like talking a little too slow, and usually I talk a little too fast because I am usually in a rush to do it sometime. So talking speed is gonna change up some. I think I'll talk slower on more complex and bigger targets, and probably speed through basic news. And finally, thanks for listening, because the year is almost over. I should be doing this in a later episode, but I'm doing it now because this is the Overhaul announcement. So, podcast was started basically 6 months ago, stopped for a month, but went from 0 downloads per episode to around 600 to 1,000 downloads per episode now, which is crazy. I've been doing this mainly for fun, mainly for my own reasons, because doing this keeps me interested in crypto, since I would have been so much better off if I stayed interested when the whole stagnation happened. So this was kind of my way to stay motivated to see the market out, even if it somehow died down. But this year has been more of never-ending growth and insanity, and a lot of interesting things going down. But just in case something happens, I'm doing this, and that's the reason I started. But people are actually listening to me, and if you're still listening this long, you're quite dedicated, and I thank you, because, well, dedicated people like you wouldn't have grown this big. And that's why I'm looking to make improvements. I still primarily do this for fun, so it kind of takes a backseat to a lot of things I'm doing now. But since I'm sure there's people who tune in twice a week just to listen, I'm definitely trying to make some changes for the better, and hopefully looking into doubling those episode downloads next year from 1,000 that I'm getting this year to 2 to 3. Hey, maybe 5K if I'm super lucky, super expensive. But thanks for listening, helping to spread the word, anyone who shares a link to the episode or whatever, everyone who listens regularly, thank you all, and expect more stuff, expect better stuff, hopefully. Right now, a lot of interviews in place, either to be published. There's one this weekend that will be the third interview I recorded, because the second one had audio issues, and I will not fix it. I will not be able to fix it in time for the publishing. So that one is good for the person that I interviewed for 2 reasons, because I think they're having a crowd sale this weekend too. And normally I wouldn't have it set up like this, but because the nature of their company, I'm not really opposed, because it's something that's been integral to crypto, and it's not just some just useless concept. So I'm fine with them making it easy on me, and me like switching out the interviews since the other one had audio problems. So expect an interview this Saturday. The one that had audio problems is, I think, the best one recorded so far, and I'll try to fix it as best as I can and publish it on the 30th. So look out for that one. And then that's it for now. More things will be revealed Monday, I guess. I have a lot more to talk about and reveal as the time goes on. But I think this podcast has been overly long, and I'm ending it. So see you Monday. Enjoy the overhauls that will come in the next 3 weeks, and see you on the next episode of the Crypto Spin Through Podcast.